Welcome to another episode of the Next Level Podcast. On God, we out here, we doing it for real. And we're going to be talking about, so look, we laid a good foundation so far, I think. You know, we talked about what it takes to have a team, what the whole transaction looks like, what you need to know, the terms, the different types of properties that you can be investing in. And I think that we can finally get a little creative with the principles and the foundation that we laid. I think we're ready to start building this house.
Let's build it. Let's go.
At least
Got
the
cement, no cracks.
Yeah, exactly. At least we got the flooring done. We got the good foundation.
Mm-hmm.
So let's do it. So there's a lot of ways that we can do creative financing, but I want to talk about one specific, and we'll talk about each one as we go.
Mm-hmm.
So the one I want to talk about is subject to. And for this podcast, I'm going to be Jimbo.
All right, Jimbo.
All right.
The man is back.
Jimbo's back. And Jimbo don't know what that subject to is. So Jimbo want to know what that is. You know what I mean?
He doesn't even know his middle name.
Jimbo don't even know what his name
What's
is.
your last name, Jimbo?
Jimbo, people call him Jimbo, and that's what he says his name is, but he don't even know.
It's on your birth certificate. It's Jimbo.
What is a birth certificate, man? I got to certify that I was born? Like, isn't this enough?
You're right. You're a physical
For
being.
real.
Yeah.
Anyways, let's get into it, man. Let's do it. Go ahead.
Okay, so subject to. Subject to is short for subject to existing finance. So
Mm-hmm.
if you get a loan with the bank, you create a note, you know, with like a corporate company.
I go buy some Post-its.
Buy some Post-its.
Is that so I can write a note? Does that count as a note? Or
Okay,
Felix.
Jimbo, let me back up a little bit. So
Okay.
a note, what I mean by a note is we're going to create a bank note, a lending note. So what that means is a bank creates, like, hey, the bank says, hey, Jimbo, I'm going to lend you $200,000. You put it on paper and create a note.
okay.
That's what a note
I'm
is.
gonna lend you $200,000. I'm gonna charge you 5% interest.
Yeah.
No
Okay.
prepayment penalties. It gives you all the details.
So the
You have
note.
to pay me back. You know, your every month you have to pay me $1,000.
Uh-huh.
Okay, for 30 years,
Okay.
and those are the terms.
So that's basically a note is like when I update an app on my iPhone or the new software update. This is terms and conditions.
Yeah.
Yeah,
it's the contract.
Yeah, terms and conditions.
The
of-
note is the contract and how it's going to work between me and the bank.
Yep,
Yes.
correct.
I was thinking that I was going to put like, do you like me? Yes,
it's
no.
called a
and-
promissory note. So it's the promise to pay back the bank.
do I got to get a
on the
promise
terms
ring with that
you guys
too?
agreed on.
No, your signature is your promise ring.
Okay.
Yeah.
We're
Yeah.
moving a little too fast, man.
Yeah.
Well, you're the one buying the house.
All
Yeah.
right. Okay. You're right.
You bought the house. You got this promissory note.
So I understand now. A note, I get what a note is. A note is how it's going to work. We're setting the expectations.
Right.
And we signed that, and that signature is my promise to the bank that, yo, I'm going to uphold my end.
Yeah, you're
Correct.
going to make a monthly payment to him or whatever agreement you made.
Perfect.
Yeah. Okay, so we're starting there.
Okay.
Okay. So Jimbo, let's pretend you just bought a house and a bank created a note for you,
Yep.
gave you now you have a mortgage on the house,
Yep.
right? So you're making monthly payments, okay?
Yep.
So what subject to is if somebody takes over those payments, okay? Or makes them for you, better yet.
Okay.
So-
I'm not paying for it. Someone else is going to be paying for it.
Yeah. So you've been making payments. You've been living in this house for 10 years.
Uh-huh.
All right. And so you bought the house for $200,000. That was the note. You owe $200,000 on the note. You bought it for $250,000. You put $50,000 down. So that's our sample here.
Okay.
Okay. So you bought it for $250,000.
Yep.
You put $50,000 down. You got the note for $200,000 or the loan for $200,000. You're making the payments 5% interest over 30 years,
Okay.
$1,000 a month.
Okay.
That's where you're at. And now you want to sell your property.
Yes.
And somebody comes to you and says, you know what? I'm not going to get a loan on this property. I want to buy it from you though. And you want to sell it to me for whatever you want. You guys agree. How much you want to sell your house for? You bought it for $250,000.
Mm-hmm.
How much you want to sell your house? You owe $200,000.
as long as I sell it.
Jimbo, I know your house isn't in good condition. Okay? You probably haven't cleaned it in probably
a little
5
bit of
years. You switched out your water heater and you're like, I don't need a water heater. I'm just going to boil the water on my stove.
It's rustic.
It's rustic. Okay, so the house isn't in great shape. You've let it go.
Yeah.
Okay.
How'd you know?
Yeah.
I know you, Jimbo. I saw by your house. You asked me to give you a CMA. I said,
That was years ago, though.
why?
Oh, crap.
I drove by it and I was like, oh, man, it hasn't got any better.
Man, I got stopped. I got a problem.
10 years ago, you forgot to paint it. So
Yeah.
you got this property, and now I'm like, according to your realtor.
Yep. That's you.
Okay.
Yeah, that's you.
Okay. So I told you, hey, Jimbo, you bought it for $250. You owe $200. You've been paying it down. You owe about $185,000 now.
Ooh, okay.
Okay. But it's in the condition it's in, you know, with the market as it is, you're only able to sell that house for about $220.
Damn, because of all the repairs that it needs?
Yeah, I'm sorry.
What if I did the repairs myself?
Jimbo, that's not going to happen. You know that. You know that's not going to happen. Let's talk realistic here, Jimbo.
Okay, you're right. I don't
I
have
want
the
to
money
just sell
for
this
it.
house for you. You got to move.
Okay.
You got to move. You're going back east.
All right.
Where
yeah.
Where are you going from? You're going back to Louisiana.
I'm going back to Louisiana.
All right.
What's there in Louisiana? What are you going to go there for?
Louisiana stuff, man.
Okay.
Okay. Don't ask him too many questions. We're just getting his house sold. All right. Don't want to confuse him.
Yeah.
Okay.
So, Jimbo, I'm going to try to help you out here, man.
Okay.
So, I got this investor. His name's Bailey. Yeah, meet Bailey. Meet Bailey real quick.
Yo, what's up, man?
Okay.
Hello, sir.
Jimbo's got a bad arm, too.
Yeah.
Okay. So, Jimbo, Bailey wants to buy your house.
You want to buy my house, man? How much you going to give me for it?
Well, we're going to have to get creative, Jimbo. I'll let Anthony explain.
No, I think so. Jimbo, I told him your house is going to go to market for $220.
Oh, you told him about the repairs and stuff?
Well, he kind of saw photos. We took pictures. We showed him.
It's hard not to.
What are you trying to hide, Jimbo?
No, it's
I
Jimbo.
don't know.
Jimbo, I'm your agent. Don't talk directly.
Okay.
to him.
Okay.
You have to come through me, Bailey.
Okay.
Okay. So
So what, is he trying to hide something? What
he's
is
not trying to hide anything. You'll do your inspections and everything like a regular transaction.
Okay.
We're just gonna talk about. We're just gonna talk about the price, right,
Okay.
Jimbo?
Oh, yeah.
Okay. So we got it.
Okay.
So we're gonna sell it for $220. How
Yeah.
much do you want to offer?
In the shape that it's in, I mean, probably 200.
Hold on, though. Each room, in the kitchen,
Wait,
and
Jim-
even in the
Jim-
bathrooms.
Jimbo.
Hold on. I put something in it, bro. It's a bottle opener on each single one.
Okay, Jimbo.
215.
Jimbo, that didn't enhance the value of the property. Jimbo, just stop.
You can open a bottle anywhere you're at in the house.
Jimbo also turned his bathtubs into fish tanks.
Dude, it's like you're fishing, but at your own house in the comfort of AC.
Okay,
Pretty badass.
Okay,
Okay, 210. My offer just going.
His offer's $210. Jimbo, stop talking.
All right, okay.
It went down.
All right.
Okay, so check this out, Bailey. I know we checked your credit, and right now you're maxed out. You have your DTI. You couldn't qualify for $220,000. What we're asking for.
Oh,
okay?
man. Okay.
No,
So I
damn.
can't,
Here-
so I
here's the
can't,
good
so I
news.
can't buy this house?
Wait, he can buy it?
No. Well, he could. He has cash. He
Yeah.
has some cash.
Okay.
Okay. Jimbo needs some money to get on his way,
Okay.
and he owes $185 on this house.
Oh, so he doesn't have very much equity.
No, he's got about, if we sold it for $220, he has $35,000 in equity.
Okay.
But what we're gonna do here,
He's got to pay you, though.
yeah, I know,
Okay.
we're working this
Okay.
situation
Okay.
out.
Okay.
I'm helping you out, Jimbo. though.
Okay.
This is gonna be on a discount, okay?
All
'Cause
right,
I like
perfect.
you. I like you.
Thank you.
Okay, you're welcome. Jimbo appreciates the generosity. So what we're gonna do for Jimbo and for Bailey, you're my client too, so I want to take care of you too.
Wait, isn't that like conflict of interest or
Don't worry
something?
about it, Jimbo.
What?
Jimbo, this
All
is
right.
your best shot at
Okay.
selling this house.
You're right.
Otherwise, your offers are coming in below $220.
Yes, sir.
So, Bailey, what we're gonna do is, Jimbo, you're not buying another house. You're gonna move in with your great uncle in Louisiana, right?
Yeah.
You know that.
Yeah, I miss him. His name is Jimbo.
Jimbo. So Jimbo is gonna move in Jimbo. All right. So now he's got a place to go. He just needs his moving costs spent, paid for. He's got to spend some money on. He's got to pay off his truck and get some tires.
I gotta buy some jerky,
some beef jerky, gator jerky. So he'll be fine. He needs some money, but here's the good thing. I know you have some cash.
Mm-hmm.
What he could do though, because Jimbo's not going to buy another place and he doesn't need to get that loan off his record, off his credit report. He has great terms. He's got a 5% loan.
Mm-hmm.
Okay, it's fixed loan for the next. He's got like a remaining 20 years on the loan.
Mm-hmm.
Okay, and he only owes 185.
So his payments are probably low.
Yeah, his payments are $1,000.
Oh, okay.
Right now, your payments at 7%. Your payments would be like $1,800. So
yeah.
So this is good. So, and you could rent it out for more than the payment.
Okay. Yeah, that's why I was buying it as a rental.
Yeah, right. So what you're gonna do though is you're gonna take over his existing loan. He's gonna okay. So he's basically you're gonna just stand in place for him. And Jimbo, don't worry about it. Bailey's gonna we're gonna protect you. We're gonna put this all in writing. He's gonna promise to take over your loan. Okay. If anything happens, you get back the house. Okay. If Bailey fails to pay you,
okay,
you're gonna get back the house because the loan's in your name.
So all I gotta do is make sure he doesn't pay it.
Well, you're not gonna make sure you want him to pay it.
Oh, okay, you're right.
Yeah.
This is something else.
Yes,
that's another transaction.
It's
okay,
another transaction. You're not trying to not make him pay it.
Yeah.
Jimbo's gonna leave. You're gonna give him some money. How much money do you have, Bailey, to put down?
10.
10,000? No, you got to have more than that.
Oh, how much do I need?
He told me he had 30.
Oh, I have 30.
Okay, so now he can offer you 215.
Oh, okay.
He can offer you 215. He's going to give you 30.
Yeah, the fish tank kind of. I was at 220, but the fish tank is just.
It's a good idea, huh?
It's a good idea. No, that devalued it $5,000. That's okay though. Okay, so basically, what he's going to do is going to give you $30,000.
Okay.
He's going to that way you have some cash in your pocket, and he's going to take over your loan.
Oh, I see. Okay.
And how this benefits Bailey is he can't get another loan right now. He wouldn't be able to qualify for the loan.
Mm-hmm.
But he wants another rental, so he wouldn't be able to qualify. But now he can, because he's not qualifying for a loan. He's just taking yours over. Okay, so you're not gonna have to pay your mortgage. You're not gonna have to pay your insurance. He'll take the taxes.
I'm the bank.
No.
Oh.
You're not the bank. The bank is the bank.
Okay, I got
you. Wells Fargo is
okay,
bank, yeah.
You're still going to be the mortgagee. You're still going to pay the mortgage. You're going to be on the mortgage, but Bailey's going to take it over for you.
Yeah,
he's going to pay it on your behalf.
Oh, he's gonna pay my mortgage for me.
Yep.
Exactly.
And apart from that, he's giving me $30,000.
Right. We call it subject to financing.
Mm-hmm.
So you're going to subject to finance him. So he's going to buy your existing mortgage.
Mm-hmm.
Okay, subject to the existing terms that are in place.
But everything's still under my name?
The loan will stay in your name.
Gotcha.
The title will go to my name, though.
But the title's going to go into Bailey's. He's going to own the house.
The loan's under my name, but the property is under his.
Correct.
Ah.
Okay? So you're going to relinquish your rights. But if he defaults,
I get the property
you
back.
get the property back, but
Okay.
you also get the mortgage back. So you have to start. It'll be your responsibility to pay for it.
Oh, we can't have that.
No, you don't want that. So Bailey's not going to. Don't worry about that. This is going to be good. So we're going to put it all in writing.
Mm-hmm.
Bailey, you're going to give Jimbo at the closing table $30,000. Okay, Jimbo. It
All right,
sounds
got my
really good, but you got to
$30,000.
pay me still, Jimbo. So you're really only getting 20.
Well, how much you want?
You're giving me 10.
I'll give you $10.
Okay, we'll figure this out
I
later.
can give you 15 if you want.
Okay, deal. $15. I'm good.
Nah, I'll take care of you. I'm gonna give you 10,000.
No, Jimbo. We'll work something out. We'll put it on paper.
Okay, we'll make a note.
How does this sound? Can you buy your house subject to your financing staying in place? Are you good with that?
Yeah, I'm okay, cause I got my money in, but it's being paid. Someone else is paying for it.
Okay.
I don't gotta worry about it.
Yeah, and so there's some liabilities for Jimbo on this.
But worst case scenario happens, I get to keep that 30,000, right?
Yeah, you get to keep the 30,000
And the property.
house. And me as an investor, I'm going to go in and fix things up. So you're going to get a fixed up house with the 30,000
And any repairs that have been made.
and repairs of them. If I get
You're
abducted
gonna
by
take
aliens,
the fish tanks back to showers.
Unless something happens and he's in the process of the demolition, and then something happens, and then I would get my house back. But during the demolition process, that's what you would say, like a liability for me. Even though I get to keep that money, but like if they already put down the walls and everything.
I guess the liability would be if Bailey rented it out and another person destroyed the house.
Oh damn.
Yeah, and we've done subject to with people, and we've never done it. But there's a document called because if Jimbo, if you do this
Mm-hmm.
and I don't make the payments, you have to go through the foreclosure process with me.
Okay.
So there's this thing called a deed in lieu of foreclosure. So there's a document that the parties can sign that if I don't make a payment, if I'm late at all, then you just get the house back right away.
Okay.
Yeah, we've never had to do it. We've done subject to, and we've never done it with sellers because they trust us. Though I know it's out there.
So it gives me peace of mind that you've done this before.
Yeah, exactly. Peace of mind. Yeah.
And so a good question you might want to ask, Jimbo, is so what happens if there's a couple good questions. So what happens if I do want to buy a house in the future? Will this show up on my credit report if I do this transaction with Bailey?
Oh, I see.
Okay. Right now, it doesn't affect you because you're not buying another house.
But once me and my uncle put our funds together and look for property,
Yep.
That's
you
gonna
want
be a problem.
You want to get a loan out. It could be a
because
problem.
I'm gonna be the primary.
Right. Okay. It could be a problem. Second question you might want to ask is, how long do you intend to sub to my property? How long do you intend to sell it? Do you intend to rent it out forever? You might want to say, hey, listen, I'll do this, but you got to pay me off in 5 years.
Mm-hmm.
Pay the loan off in 5 years. So we can create additional terms to your existing finance to make it work for you and for Bailey.
Gotcha. Okay.
So you might want to say, hey, so you might ask that question, and you might say, hey, listen, I'm fine with this today, but in a couple years, like say 2 years, me and my uncle want to go buy another place,
Mm-hmm.
Jimbo, go buy another place, and I want you to pay I want to be paid off, by 2026.
Okay.
Okay.
I gotcha.
So that way it clears off my credit report.
Your uncle's name's Jimbo.
Yeah, so my daddy's name is Jimbo, and I'm Jimbo named after him, so I'm Junior Jimbo.
Okay.
And my uncle, he was the second born, so he's Jimbo. And then the third one, his name is Jimbo, with 3 O's.
Oh, okay.
Yeah.
Jimbo.
Yeah, so it's Jimbo, and Jimbo.
Jimbo. All right. So, sound good now? We got all that in place?
I understand
And
it.
there's other questions that come up. Bailey's never kept a subject to for longer than the rehab process. Typically what he does is he buys it, he fixes it up.
Yeah.
Yeah, listen, Jimbo, this is what I'm going to do, okay?
All right.
So we're going to, if it's something that you'd like to do, something that's in your heart you want to do, then what we'll do is in the document, I don't intend to keep your property long term. I just want to keep it for, let's say 3 years, so where I can pay off my debt, and then I can refinance out and get another mortgage. So if that didn't make sense to you, just know that we'll this will happen for 3 years. Then at the 3-year mark, I'll pay you off. I'll pay off the mortgage that's in your name. That way, in 3 years, you can buy another property if you want. The mortgage is going to be out of your name.
That's perfect. That's about how long it's going to take me to save up.
All right, perfect. So it seems like a win-win situation.
Yeah, I'm getting my house paid for me, and I also get $30,000 down as well, like right away. And then it looks like you, sir, you get the property, but it's not going to be under your name, and you will have, if you want to get a loan or something, you have that availability because the loan's not going to be on your name.
Plus, I get free fish. He's got fish tanks.
There you go. And
Thing
is that your credit is in good shape.
Mm-hmm.
A lot of people in these situations, just to come back to reality, is a lot of people why would I do this? Why would, besides the property being in distress, why would I sell this way? And a lot of times it happens when people don't have a lot of equity at all. They're either upside down or they have a couple $1,000s. They can't pay the real estate agent. They have they bought it for $210 and they owe $205 and it's only worth $212 because they've only had it for a month or two. Because this happens. You have people that come to us and say, hey, I just moved into the property last month or a couple of months ago, 6 months, and I hate it here. It's way too hot in the summer, or my family moved, or my mother died and I got to be back there with my father.
They have no equity.
They have zero equity. And
but they got to move fast.
Yeah, they got to move, and they can't take a loss. They absolutely cannot lose, take a loss. Yep. They got to pay off the mortgage, right?
Yep.
Because the bank's going to foreclose on them. So what happens is you have to, you can sell it subject to the existing financing. So sometimes a blessing in disguise is somebody say, hey, I'll just take over your mortgage payments for you. I'm walking into a property that has zero equity, but I need a place.
Yeah, and there's sometimes where there's negative equity, where somebody's behind in payments.
Yeah,
like
they're
in pre-foreclosure or foreclosure. You hear this happen all the time. People fall behind on payments. This is a creative way to be able. You can offer hey, I'll catch your mortgage up. Let's say you're behind $5,000. The seller, you can let them know hey, I'll catch your mortgage up at $5,000. We'll stop the foreclosure process, and then I'll give you some money to move on to the next chapter of your life, and
we'll take over the house payments for you.
Exactly.
So it's hey, look, we're gonna catch you up, so you're not in foreclosure, you're not in that status.
Yeah.
We're gonna give you enough so you can go find a rental property and move into that. And then you're going to have, from the funds we're giving you, should be enough for the first and maybe even 1 or 2 months of rent. And then after that, you don't have to worry about paying this. All you have to worry about is just paying rent for the property where you're going to be staying in.
In addition to that, it's going to help your credit bump back up because we're going to make your payments on automatic month after month.
Oh, they're always going to, okay.
Yeah.
Yeah, that too.
Yeah, so it could really help somebody out of a difficult situation. Now, where a lot of people would get this wrong, they call it a wrap, which wraps, people don't allow wraps to happen, but there is documents that allow us to do this and title insurance that can be taken out to allow people to protect themselves from any liabilities. So it's some guys are doing, they're buying properties every single day subject to the existing finance. That's their whole strategy, is to buy subject to properties. So there's no money out of pocket. They're looking for the situations where people really got to move. No money out of pocket. They're acquiring a property. And where it really makes sense is when you got a really good term. A lot of people just bought properties the last few years at 3%. So you're picking up all these mortgages at 3%. And you can, even if you have zero equity in it, you now have a great rental for a long time. So it can really help somebody out. It's a real creative way to help people out of a difficult situation.
Yeah, no, 100%. So as an investor now we talked about, hopefully that was very detailed on what it is. So hopefully you understand it now. If Jimbo gets it, you should get it. So an investor is like you're talking about. You either do that subject to, and then you can now have it as a rental. You're helping somebody out of a bad situation, and now you're getting income because you're renting it to another family. Or something else you can do too, right, is you do the subject to, but you have a timeline of all right, guys, 4 or 5 months, we're going to get this flipped, and then we're going to sell this. And basically, could that work? Instead of having to take out a loan?
I think that's the most appealing thing to most people is
because if not, then you got to go and you got to get a hard money or private money loan. But now instead of doing that, you don't got to do that no more. You just got to pay the mortgage.
Exactly. Yeah. That's a great way to flip a house. So if you can find that situation, just say, hey, if you could just hang in there for 4 or 5 months, 6 months, give me 6 months, I'll pay this off because I'm going to sell it.
Yeah,
I'm going to sell it. Right now it's only worth $200,000. I'm going to put $20,000 into it, and it's going to be worth $260,000, and I'm going to make, I'm going to sell it for more and make a profit, but you're out of your situation.
Exactly. You're all cut up. You're no longer in foreclosure if you were in foreclosure.
Right.
Your credit's going to be better. You don't have to worry about that payment anymore.
Exactly.
You can move back in with your parents or family members or somebody that can help you out, or go rent something that's much, much cheaper that you can afford while we get you out of the situation and get you clear. So that way, now your name is no longer tied up in a contract, on a mortgage. So now if you want to in the future, you could apply to purchase another house because you will have no debt.
That's exactly, and that's usually what happens. I mean, there's people that do the long-term approach where their intentions is to keep that property for years.
Yeah.
And as long as the homeowner is okay with that, or the existing mortgagee is okay with that, I mean, that's all how they, all up to them, the parties, how they get to terms on things. So, but what we've done typically in the past is we don't keep them long term.
Right. We flip them and we
you flip them, we sell them, and
flip them, sell them, yep.
and move on. But that's a great way that people that don't have a lot of cash to get into the business.
Yeah, that's what I was going to tell you. I'm so glad that we started off with subject to, because it just makes sense with the way we laid the foundation and all the principles. This is a great way if you want to get into this, but you don't have the funds to do a down payment for a private money loan or anything like that, but you have enough to maybe do something like this, or maybe you don't want to get a loan for that much. Maybe you just want to get a loan for the repair costs, because that's what you can afford, instead of getting a loan for the purchase price.
Or you have the repair cost.
Or
repair cost. You have $30,000, $30,000 to do the repairs, but you don't have the money to put the down payment for the hard money loan, or to pay cash for the property.
Seems like a great way that this is a great way for you to get your foot in the door.
Yeah, and you see a lot of gurus on Instagram saying, "Oh yeah, I just bought this house with $0, no loans, no nothing. I'm sorry, no private money, no nothing, hard money, nothing like that." This is how. This is one of the ways is subject to, where in order to get your name on the deed of a property, this is how you can do it with zero money.
I gotcha.
That's why they call it creative financing, because it's a creative way. You're not financing the property yourself, but you're using the financing in place, the existing mortgage in place to mortgage, to leverage yourself.
Okay. Yeah, that's awesome. That's badass.
So, I mean, there's lots of communities. There's Pace Morby with the sub-2 community. He's really big into it, but he's not the inventor of it. It's been going on for years. I think a guy named Tony Robinson.
I don't know.
Yeah, out of North Carolina. He was like the guy who started doing them. But I've heard old school investors do it.
Oh yeah, I think Subject 2's been around since the dawn of time. It's just, I think since the past 10 years, it's become like a sexy new thing.
Yeah.
So I think it's been around for a long, long time.
Right, and I think a lot of banks, they kind of put the squash on it for a little bit. Okay, is that better?
Yeah.
Okay. Usually I talk too loud, so I pull it back, but
no, you're good.
keep it up. Okay.
Yeah.
A lot of banks, they kind of frowned on it because they're lending the money to Jimbo, not to Bailey, and so they're underwriting the deal according to his position. But as we know, somebody can lose their job the day after they get a loan, and an unfortunate situation. But situations change, and so the bank doesn't care who's making the mortgage.
Most of them don't. There's some. Let's talk about the risk for the investor. There's something called the due on sale clause, to where if a bank, let's say they're not, they don't want the subject to happen, and they see that somebody else is making the payments other than Jimbo, they can call this thing called the due on sale clause, and they could call the loan all due and payable on a certain timeline.
Yeah, that's right. So how would they know that? I mean, there's a couple of ways. If they get it triggered, like you have to notify so you had insurance on it, Jimbo.
Yep.
But Bailey's got to put his own insurance on it, because
now there's 2 insurances on there.
No, you're gonna want to replace it.
Yeah.
Oh, okay.
You're gonna want to get yours off.
Get mine off. Yeah.
Yeah, because if something happens to the house, Bailey wants to be covered because he's the one his name was on the title now. So Bailey has got to get the insurance on in his name. So he's got to tell the mortgage company, "Hey, I'm going to be insuring this property," and they look at it and they go like, "Why are we insuring Bailey Arvizo when Jimbo owns the house?"
Right.
So that could tip him off. The other thing that could tip him off is taxes. for some reason that gets tied up and that doesn't get paid. They check, they look at the title. Well, whose name's on title? And
it's no longer my name.
It's no longer Jimbo.
It's Bailey, yeah.
Yeah, what's going on here? So that could trip the all due and payable clause.
Yeah, majority of banks, though, from what I know, they don't. They just, obviously they just want to get paid.
Yeah, banks don't want foreclosures. It's a long, lengthy process.
They don't want it back. They just want it.
They want to lend the money and get paid with the interest. That's how they say banks have the tallest buildings, some of the tallest buildings in America for a reason. That's interest, compound interest.
Yeah, so they're good with that, but it could happen. And so there's documents and there's ways you do it that the professionals know how to do it. You got to have all the documents correct to be able to, change that insurance the right way. To be able to notify them, hey, send the bills to this address.
Yeah, and also there's only some, let's say you're working on the transaction as an investor, not all title companies understand it. So you have to talk to certain ones like Anthony years ago, we did subject to, and then we were on a podcast for it because Anthony figured it out. But there's some types of loans, like FHA loans, you have to self-perform them on the investor side. The title companies won't back it with title insurance. So there's a lot that goes into the particulars of it. So it's done the right way.
Yeah.
Gotcha.
Yeah, they won't go down, record the deed for you. There's certain things that title companies won't do that you got to do yourself. But you just buy a policy separate. I mean, there's some steps to it. We can if somebody
nothing
wants to
too
learn,
difficult.
Yeah, if somebody wants to learn how to do it, we can teach them how to do it.
Yeah.
But we were on a podcast. I don't know. That was for Pace Morby, wasn't it?
Yeah, that was for Pace Morby a few years ago.
Yeah. So, and we have the title companies that will do sub 2. We have those companies that will do it, and we actually know a girl that. She's been doing it for years. She's probably done thousands of them. She'll handle all the paperwork for you.
Yeah, you just pay her a fee and she handles everything.
Nice.
Yeah.
Nice.
So, she'll even explain it. I mean, she won't pitch it for you. You just got to find, a party that's willing to do it.
Yeah.
And if they have those little questions that we were explaining to Jimbo, she'll go over all of that just so they know they're very clear on what they're getting themselves into. And what they're agreeing to, and she'll go over all that with them.
Yeah, so that's a huge asset to have.
Yeah, that was awesome because we just basically say, hey, listen, here's the client, here's the terms, put it together. She'd write all the contracts, she'd get all the paperwork, and all we'd have to do is sit back and give her money for the work. It's just wait for it all to be done, and
she took care of it.
Yeah,
yeah. Exactly. Like in theory. Like if you're a new investor, like, okay, this is like drinking through a water hose, but I understand it enough to be able to pitch it. And you may not be able to answer the particular questions like Anthony's talking about. So in theory, you could find an opportunity like this with a seller and then pitch the idea to them and have them at least be open to it. And they probably have questions and then just be like, okay, well, I have a transaction coordinator of ours who can explain it more in detail. And then ergo that individual Anthony's talking about. And so in theory, I mean,
and that's power too, because it's coming from somebody else and makes it feel a little bit more official.
Yeah. So if you're
exactly,
you get another chef in the kitchen, it sounds okay. Wow, this is legit. So what I'll say is don't get, if this is the first time you're hearing it, you're getting caught in between paralysis by analysis. Just get the concept down enough to be able to understand it and be able to relay that to a seller. And then if you need assistance, we're here and we can send you resources or title companies, things like that, who can be able to assist you, with the particulars.
Exactly. 100%. Yep.
Yeah. That's all I got to say about
that.
Yeah,
I love it, man. Subject to is badass. And this is just one of many ways of creative investment, man.
1,000 ways to skin a cat. Stay tuned for next time. We'll probably talk about seller carryback. And then there's something called a hybrid, which is really interesting. I mean, we all nerd out on this stuff. So there's a bunch of ways to do this. So
Jimbo's going to be busy, dude.
Yeah, Jimbo's
going to be learning.
Jimbo's brain's going to hurt. That's crazy.
Yeah.
Well, that's pretty much it, man. I'm so glad you guys were here for this episode of the podcast. This one's a very powerful one. We're showing you a way to get your foot in the door when you really want to start off. Like, if you really don't have any money at all, this is one way you can do it. There's ways of going around it. You want to learn more? You're always welcome into our office. Don't forget to go to our Yuma REI meetings every month, every second Thursday of every single month. And it's going to be some exciting stuff, man. We teach you a lot of things there, too. For example, we already teach how to do cap rates. We teach how to find a deal and do the calculations to confirm if it's a deal or not. And I'm excited for what we're going to be teaching next. So I'll leave it for a surprise. And keep an eye out for that stuff. We are Next Level Home Buyers. We don't buy properties. We buy problems.
Nice one, Felix.
Nice.